is one thing Washington, believe it or not, can agree on is lower pharmaceutical prices for drugs. Some of the proposals out there are allow Americans to import drugs from Canada. And another proposal supported by the White House is allowing Medicare to negotiate directly with the pharmaceutical companies. The end result of that can be lower prices of about 10 to 25% on drugs. And if that is the case, a lot of the big pharma companies can have about 15% shortfall in earnings reports. Back in 2016, price increases for the pharmaceutical sector accounted for 100% of their growth. And in 2017, 80% of price increases accounted for the pharmaceutical companies' earnings growth. And that is going away as we speak. In fact, year over year, pharma prices are up only 3.6%, and that is half, more or less, of what it used to be. In 2015, drug prices were going up about 18% year over year. Today, we are at 3.6% year over year, and that number keeps going lower. If we were to invest in the pharmaceutical sector, these are companies selling at about 10 times earnings, pay high dividends of north of 3%, we need to be investing in companies that are relying less and less on drug price increases. And some companies that come to mind that do it very well is Regeneron. Another company that doesn't rely at all on drug increases is Merck. In the first quarter of this year, market is expecting to see about negative 1% corporate earnings growth. As a result of that, the 10-year Treasury yield dropped to about 2.7% from 3.10. The Federal Reserve's already started retracing their stance on increase of interest rates. And now the theme is that they're going to be patient. In fact, they're going to most likely stay with about $3.4 trillion in balance sheet made out of treasuries. And some even think that not only they are not going to raise rates in 2019, in fact, towards the end of the year, they might actually start cutting interest rates. GDP growth rate dropped 3+% to 2.3% this year. Long term, the idea is that GDP growth rates are going to settle down at around 1.9% growth for the US economy. This government shutdown already cost us about $11 billion, of which $3 billion are not coming back anymore. But here is the good news. If all these estimates are coming down, I'm going to make a prediction that the likelihood that towards the end of the year, we're going to have better growth rates is quite high, because earnings comparison are going to look a lot better in the fourth quarter of 2019. Growth rates might start picking up from negative 1% to 4 or even higher. Now, in a market that is slowing down, it's important to look for investments that have that ability to grow regardless of what the economy is doing. We call these companies that operate in that space secular type growth companies, or as I like to call it, companies in a super cycle of powerful long-term trend. And what comes under that title are mostly technology names, because we have three major super cycles in technology in front of us. The number one cycle, which we call it the Internet of Things, it has to do with the upgrade from 4G to 5G and autonomous driving. That is $4 or $5 trillion in 25, 30 years from now, but it's picking up steam very quickly. We have another mega cycle, that is the augmented reality cycle. And the third cycle is the artificial intelligence cycle. But that said, valuations are not overstretched. The market now sells at 16 times earnings. We had the weakest December on record since the Great Depression, where markets were down about 14 to 15%. And guess what? Suddenly we had the best January in the past 30 years, since 1989, whereby companies were up about 8%.
Those three super cycles that you're talking about, at the core of all of that is chip technology. And we should never forget that even though, like Intel, we had soft earnings in this last quarter, which is typical for chip companies that are going through changes in technology. The technology changes about every 18 months with them. There's another company that's going to be required for autonomous driving and all of these things is devices. Cisco is one of those companies that we need to look at, because they're at the core of all the infrastructure that goes on in terms of data transmission, data that has to be stored.
Going back to companies in industries that can grow irrespectively of markets, take NVIDIA, for example, just to show you. how companies can grow business even in down markets. Back in May 2016, they came out with their most powerful chip, the graphic design chip, that improved gaming performance by about 50 to 100%. On that product alone, they managed to grow their business north of 400%, as opposed to the market that moved up, I think, about 30%. There is one thing to say about AMD, they're always the underdogs. Their best years managed to take 10% market share. They came out with a new microprocessor. They call it ROM, that uses 7 nanotechnology. So they are actually ahead of Intel, because Intel's technology, the 10 nano speeds that they manufacture, is going to come to market only in 2020.
Esports is competitive video gaming, and it's becoming a spectator sport now. Forming teams in cities much like professional sports is. Right now they're estimating the global audience to be about 380 million people. The 2016 League of Legends Championship attracted 43 million viewers, and the NBA Finals attracted 31 million viewers.
It's interesting, a lot of people don't think about the development aspect of Amazon, but it is a business all in itself. It's called Amazon Web Services. Amazon Web Services is worth $270 billion as a company all in itself. People underestimate that it runs a good portion of the web. Entire companies run their infrastructure in Amazon Web Services. Even data-intensive companies like Netflix.
Jerome Powell had talked about the Fed's policy on interest rate increases for 2019. Towards the end of the year, we could see a scenario where they actually cut rates rather than increase rates. So based on those comments, we did see some volatility. The 3-year to the 5-year has remained consistent at about 1 basis point since it's inverted back in December. And the 2-year to the 10-year has stayed consistent anywhere from 16 to 18 basis points. So although there's been some fluctuation in there, that spread has remained pretty consistent.
Hello everybody, and thank you for taking the time to watch our videos. I'm Amit Stavinsky, the Managing Director of Tamar Securities and its affiliates, 911 Financial Services and Firefighters United. If you like the content, please become a subscriber to our YouTube channel. Also, you can call us directly to our main offices in Woodland Hills at 818-914-7461. The highlight of the week is that during times of slowing down economy and a reduction in corporate earnings growth, be sure to invest in companies that are in super cycle, secular long-term growth that can still perform and increase their revenues irrespectively of market weaknesses.